Hey, we'll talk about COPA profitability management today. We'll just give you an overview of profitability management and what it's all about. At the later stage, we will go into more configurations of the COPA, but it is important to understand the basic overview of what profitability management is all about. So what we are going to talk about is course overview of something we will discuss later. First is profitability management, then we will move on to structures, then we will move on to master data, then we will move on to actual data, then planning, then information system, then tools, and then we conclude. So this is the overall course structure. So we are going to talk about profitability management first. So let's talk about the methods in profitability management. How profitability management is done, what are the methods being used in the business. So number one is cost of sales accounting. In cost of sales accounting, you have revenues, you have sales deductions, you have cost of sales, and then you get the gross results. And then you deduct your sales and marketing cost, the administration cost, R&D cost. So here what you do is you calculate the cost of goods sold, you calculate then you get the gross result, and then you deduct the cost of the additional cost, the administration cost, you put it on the product, and then it comes finally to the net result. But in period accounting, what happened? In period accounting, you have revenue, you have sales reduction, then you have stock changes. You have capitalized internal activities and changes to WIP. So all these are also taken care of in period accounting, because in period accounting you have to report all what you have done in the period. It's not just about the COGS, it's not just about the cost of sales, it has to be into the period accounting. Whatever has been done in the period. So all those you have, for example, if you have inventory and you capitalize that, so you have a movement. If your material is moving from your finished goods to your fixed assets, so that's you have to show it in the period accounting, because there is a movement within balance sheet. Changes to work in progress. Your work in progress was $100, this time it is $90, or it might be $120. So whether it is plus or minus, you have to show in work in progress. Then you get the total output, and then you have the material cost. You deduct the material cost, the material, the employee cost, the depreciation of the asset, then interest, and then you get the final result. So these are the methods being used in profitability management. It depends. Both methods can be used together. It depends, how you want to present your financial statement, how you want to calculate your numbers. It all again in the decision of the organization. Then another, we have responsibility accounting. Responsibility accounting is something where we have profit centers. Profit center accounting is all about responsibility accounting, where you have profit centers within the company. It's a company within the company. You calculate your profit by business. You calculate your profit by product, by region, based on how you have a profit center accounting, and then you get what is the revenue or what is the return on investment for particular business. Taking an example, let's say your company is in two different products. Now in those two different products you have revenues, then you pay salary, you have raw material, then you have profit, and then you have return on investment. So now business will see your return on investment for this product is 12%, but for any other X product is 18%. So it is better. The another product is better. It is which is more performing product. Now based on that you can decide that you have to invest more in this product or you have to invest in another product. It can be by region also. For this region your ROI is 12%, but for East it is 12%, for West it is 16%. So you are performing well in West. Now you need to improve your performance in East. So what you have to do, you have to invest in more in marketing, you have to invest more in promotional activities, you have to understand the customers. All those activities has to be done based on your understanding. So responsibility accounting is another internal decision making tool where it can help you to focus the market, focus the product. And then we have profitability segments. We have revenue, we have discount, we have cost of sales, we have contribution margin, then we have marketing activities. The profitability segments is another view of the profitability management. And at the same time, the following, the procurement, production, sales and distribution, sales, all these things go on in the organization, and based on the data provided by all these areas, we compute, we come up with the views, we come up with the reports. Okay. So let's talk about profitability analysis by market segment, how it works. So let's understand the first left hand graph. The sales quantity, you have revenue, then you have discount, commission, net revenue, then you have contribution margin 1, contribution margin 2, contribution margin 3, and then you have operating profit. This is the simple calculation structure. Now what is driving that? Based on all these items, you derive, determine and analyze the profitability of market segments. You have revenues, you have cost, right? Now based on that, you can determine whether you are right in your decisions, your product is performing well, you are working in good in that region, you have profit or you have loss. At the same time, if you see on the top, you have reporting dimensions. Now all these reporting at the bottom, profit and loss reporting, cost and revenue reporting, all these are driven based on business unit, region, sales office, customer, products. Right? So when we say business unit, it is like you can say I am into manufacturing, I am into sales, and I am into services. So business unit is my manufacturing. Region, I am playing into region east, west, north, south. Sales office, within east I have 100 sales offices. Products, I am into 10 different products. Customers, I have 4,000 customers. So I can make the dimensions, the combinations of all these areas, and I can get the reports. If you see on the top there is a cube, so that means I can have a cube, the dimensions in the cube, and I can play around the cube to get the right combination that for this business. So you can say, like in manufacturing business in eastern region, for this sales office, for sales office 1, what is the sale of my X product? So you make a combination of 4 dimensions in the cube. So out of these 4 dimensions, now you get whether you have profit, you are that region, that business sales office is performing well for that product or not. You need to work on the sales office now. So till that level of drill down reporting by market segment can be given by COPA. Another view of reporting. Same thing presented in different formats. In profitability analysis, you have value fields, sales, your revenue deductions, your contribution margin 1, 2, and 3. Now if you present the same thing in the profit center accounting, you have by cost elements, cost, your revenue, sales, cost of sales, price different, your cost, your profit. Then you have AR, AP, inventory, and now what is your cost of capital? And your final profit is 18,000. So your total profit of 100,000. Out of that, cost of capital is 82,000, and then which is 11%, and economic profit is 18,000. Okay. So we have economic profit and we have cost of capital. So this is the same. If you see, the data is same, the numbers are same. It is just how you present, how you report your numbers, how you do your analysis, how you calculate your different numbers, how you present things to the authorities internally for management reporting and all. So it's all about this. Views in COPA, we have different views in COPA. We have a group level, we have company code level, we have intercompany, we have intra-company. We have group level, which is the top, the overall company results. We have company code, we have per company legal entity results, and then we have through trading partner. Then we do have intercompany, how we are selling between each others, and then we deduct that, when we calculate the company results. And then we have intra-company. Within the company, how the divisions are performing, how the profit centers are performing within each company. So these are the different views in COPA. It depends how you want to analyze results, how you are structured your COPA reports to get the right numbers. I hope the picture says too much. So it can go from bottom to top, it can come from top to bottom. It all depends how you are going to read this picture, but you read it from anywhere, it gives you the results, it gives you the reports. Okay, comparison. Now how the same thing can be, gives you the different comparative views. This is just a comparative view. Aim of profitability accounting. So costing based COPA is market profitability, and profit center is enterprise controlling. So with COPA, account based or cost based, you want to see how you are performing in the market, but for profit center, you want to see how you are performing within the company. Methods. COPA use cost of sales accounting, while profit center can use cost of sales and period accounting, as we just talked in the first slide. Let me give you again the same picture, the cost of sales and period accounting. Okay. Objects to be analyzed. So in COPA we analyze profitability segments, and in profit centers we analyze profit centers. How we are performing, my manufacturing profit center, my sales profit center, my R&D profit center, how we are performing. Key figures. So in COPA we get the profit related figures, while in profit centers we get profit related as well as the financial figures. So table is well explaining when to use what. It depends now what is the requirement in the yellow box. If you see what is the requirement of the business, how they want, what they want in the reports, and based on that they can take a decision which report will suffice what. In continuation with the same, currency translation. So in COPA we have costing based, we have operating concern currency, but in account based we can have company code currency as well, and the same will be in profit center. It will be transaction company code or profit center currency. High level aspects. Operating concern is top in COPA. In account based we have controlling area, it is more CO driven, And in Profit Center again we have controlling area. Reconciliation with FI, so it is a more complex job. Posted and eliminated values in cost-based COPA, while in account-based COPA as well as in Profit Center we reconcile with the posted values, what has been posted, because we, in both these areas we play on the GL account, we play on the cost elements. Okay, so giving you again the summary, we have methods in profitability management, cost of sales accounting and period accounting. Then we have Profit Center accounting. We have profitability analysis by market segment, different views of reporting with the same data, different views in COPA within the same company, and then we have a comparative table. So moving on, we will, in the next session we will cover the structures, master data, actual data. We will go in the same sequence and we will cover more. Thank you.